All right, hi guys, welcome back. So we're going to take a look now at using what is called the Schedule A, which is your itemized deduction. And again, why do we care? Is because we want to know, if I itemize, will I get a better deduction than the standardized deduction, in this case the $24,400. Okay, now so you're going to have to work through this to determine that. You're not going to know until you itemize whether or not you're going to get a better deduction. All right, so here are the itemized deductions. So they paid $12,176 for their medical insurance. They also paid $600 for prescription, $5,240 for doctors, $2,300 for dentists, and $510 for eyeglasses. Now, the medical insurance only covers 80% of their expenses. So they had to pay 20%. So we want to add up all their expenses, not the insurance, but just what they paid out of pocket for events. So we're going to add up the $600, the $5,240, the $2,300, and the $510. Okay, and we're going to get $8,650. Okay, so their insurance only allowed for 80% of that, so they had to pay 20% of their medical bills. So we're going to take 20% of that. So 8,650 times 20%, because that's how much they paid out of pocket, which is $1,730. Okay, now we're going to add that to their insurance because they did pay for insurance overall. So let's call this overall. Okay, so we're going to take their insurance, which is $12,176 and $1,730. And that's $13,906. Okay, now there are going to be entered in line 1 of our Schedule A. Okay, so let's go down here. Okay, so here's Schedule 1. We already did that. Here's Schedule A. Medical expenses. So we're going to put $13,906 on our first line. Okay, so medical and dental expenses. So $13,906. Now, what we're going to need to do is enter, okay, so if you look, second line, next line says enter your amount from your 1040, how much, they basically want to know how much money what your total amount of money is, $121,409. Okay. All right, now we're going to need to multiply that because your medical expenses are more than 7.5% of your total gross income, which is the 121. Then you're going to be able to deduct that amount. Okay, so we're going to come over here to our little work area and we're going to take 121,409 and times that by 0.075. Okay, now I know in here, I don't know why it says 10%, it's 7.5%. Okay, all right, so when we multiply them together, okay, we're going to get 9,106. Okay, all right, so that's going to go on the next line. All right, now, if that number is smaller than your medical expenses, okay, so if the first line 1 is bigger than line 3, you get to subtract those two lines and be able to deduct that. If line 3 is bigger than line 1, then you can't deduct anything, and line 4 becomes 0. So these two are bigger than 13,906 is bigger than 9,106. So we're going to subtract those two, and that's what we're going to end up putting in line 4 so that we can itemize that deduction. So 13,906 minus 9,000 106 is 4,800. And that's what's going to go here. Okay, so this outside column here is what we're going to add up at the end to determine whether our itemized deductions is bigger than the standard deduction. Okay, all right. So let's see what else. Let's see where we can go here. All right, so we had the next part is taxes you paid. So if you look on the left-hand side, it actually lists everything. So how much taxes did you pay? So they paid last year $6,213 in real estate taxes, state and local taxes, things along that lines. All right, so they had state income tax withheld, and they also had $6,200 in real estate taxes and $9,100 in mortgage interest. So we're going to enter these all over here. Now we have to go fetch their state income, off their W-2. So let's come back up here. Okay, so their state tax is the 1,919, that one, and this one, and we're going to have to add those together to figure out their state. Okay, so 1,987 plus 2,101, so 4,088. So that's what we're going to put in state and local tax line 5. Okay. General sales, blah, blah, blah. Okay, so that's just going in line 5A, 4,088. Okay. All right. Real estate taxes. So if we look, okay, 6,213 in real estate taxes. All right, state and local property tax, they didn't have anything. So we're going to add these two lines together. 5D is the sum, so that's 10,301. Okay. All right, now enter which is smaller of line D, or $10,000. So in other words, you can only deduct $10,000 or the smaller. Okay, so the maximum is 10,000. Our value is more than 10,000. So we're going to enter 10,000 here. Okay. All right, and any other taxes which they don't have. So line 7 is 10,000. Okay, so 10,000 is the maximum that you can claim under real estate. Okay, so if you look, interest you paid. All right, so let's come over here. All right, so they had, oh, I missed that. Okay, so they did pay, well, I missed that, $9,100 in mortgage interest. Okay, so let's put that in here. Home mortgage interest, $9,110. Okay, they don't have any points or anything. Mortgage insurance, all that. So this is just going to be line 10 is 9,110. All right, gifts to charity. They did have charity. Okay, they gave $987 to different charities. The highest they gave to single charity is $100. They also donated $450 worth of old clothes to different charities. Highest value they gave in any single charity was $120. Find the total of their charitable contributions. All right, so we're going to add the 987 and the 450 to get our total. Okay, so that's going to give you $1,437. Okay. All right, so if we come over here to gifts to charity. Okay, gifts or cash. If you made any 250 or more, see special instructions. They did not. Okay, so that's 987. Okay. All right. Other than cash check, did you make any gift of 250 or more? They did not. So that's okay. So that's going to be 450. And again, it says right here, if you did any over $500, you have to attach another form, which they did not. Luckily, we don't have to do any more form. So line 14 is that total. And again, we're doing all of this to determine if our standard deduction is larger or is this larger. Okay, so our next one is casualty and theft loss. So they did have that. They had $12,000 worth of flood damage not covered by the insurance, and they had a camera stolen, okay, from while they were on vacation. Okay, so we need to look at their deduction that they're going to have here. Now, according to the IRS, you have to deduct $100 from each of your casualties. Okay, and then again, that's in that instruction booklet. So we're going to take $12,034 minus $100. So that's going to give us $11,934. And then we're going to take $980 minus $100. And that's going to give us $880. Okay. All right. Now, the only part is the deductible that we have left. So we're going to, according to the IRS, we're going to do 10% of our total gross income and then subtract that from the total. So we're going to add these two together first. And we're going to get $12,814. Okay, so we're only allowed to deduct the difference between that value, the total of their casualty, and 10% of the gross. So we need to take that 121,409 times 10%. Okay, we're going to get 12,140.90. And we're going to find the difference between those two. And that's how much we're going to be able to deduct to the nearest dollar. Okay, so 12,814 minus 12,140.90. And we're going to get rounded 673. Okay, so that's what we're going to be able to deduct in our line 15 here. So we come over here to casualty and loss. We're going to write 673. Okay. All right, so we're almost done with this. Almost. We're almost done. Okay, so they don't have any more itemized deductions. If we look over here. All right, so they don't have any more for line 16. So we're going to just add all this up. Okay. All right, so we don't have any more, so we're going to total this whole column. Okay, hence it's a separate section. The 4,800, the 10,000, the 9,110, the 1,437, and the 6,073. And we're going to add all those up. And when I did it, I got $26,020. Okay. Now, that number is more than the standard deduction of $24,200. So when we come back up here to our original form, okay, in line 9, we're going to put $26,200 or 20, okay, because that's more than the standard deduction right here, $24,400. So that's why we're going to use the itemized here. Now remember, that's going to be subtracted from the total gross income. And that's going to be on line A. Well, we're just going to put that here first. And then we're going to subtract those two and get our total adjusted income, which would be $95,389. Okay, so instead of being taxed on $121,000, they're going to be taxed on $95,389. All right, so we only have a couple more things to do. So that was the whole first page. That seems like a lot, okay? But now we're ready to determine tax credits. Okay, so deductions, remember, are done before we look up their tax in this tax schedule. Now we're going to look up their tax in the tax schedule. So we're going to look for $95,389. Okay. Okay, and they're filing jointly, so that's going to be $12,700. Okay. And that's going here. And remember that we just put it in 12B as well. Okay, so we looked up their tax deduction. Okay, so we did that just as for taxable income, which was $12,700. All right, now. Okay, now remember they still had one more thing. So we went back up here and we double check. We did all of our itemized deductions. So the only thing left to do is the child care. All right, now remember that's a child care credits, which means that we're going to come back. We're going to do that after we find their taxable amount. So we're going to take that $1,213. Okay, so that's down here. Okay, so there's credit of $1,213, and we're going to subtract that from their total tax. Okay, and we're going to do that on line 13A. See, child tax credit, so $1,213. Okay, and 3B says, okay, do you have anything else? Nope, just the $1,213. Okay, so we're going to subtract that, all right, from, okay, those two, $12,700. See, it says subtract 13B and 12B. Okay, so we're going to subtract that, and that's going to be in line 14. Okay, so when we do that, we're going to get $11,487. Okay, so that's their total. They don't have any other tax credits. They don't have anything from, again, another form. So we're going to do total tax of $11,487. Okay, now, federal tax income from their W-2. So the question is do they owe? So we'll come back up to the beginning. Remember I said we're going to do our total tax, so I did it here. And we get $9,266. Okay, so that's line federal, that's 17. So $9,266. Now, unfortunately, we're going to subtract those two, and we get $2,221. And that goes on line 23. I missed a line. What was 19? Oh, their total. Okay. All right. So they owe $2,221. Okay, and they can send a check or whatever, but they would need to attach all these forms that we did. Okay. Now, we did not use the Schedule C because they had filled that out prior. And then I also here have Schedule E, Supplemental Income and Loss. That's if you own a business as well. All right, if you have any questions, please let me know. Have a great day. Please stay safe. Stay safe.